Loan assessor process. How loan officers evaluate loan applications. When someone applies for a loan, it's the loan assessor or credit officer who decides whether the borrower is eligible and under what conditions. In this video, we'll walk through the step-by-step process that loan assessors follow to evaluate and approve loans responsibly. Loan officer meeting with client. Title overlay. Loan assessor process. Step-by-step guide. Receive loan application. The process begins when a borrower submits a loan application. The loan assessor collects all the required documents, including national ID or business license, income, or financial statements. Collateral details. Purpose of the loan. The goal here is to ensure complete and accurate information before starting analysis. Form, submission, checklist, document, scanning, interview, and site visit. Next, the loan assessor conducts a borrower interview to better understand the purpose, income sources, and repayment plan. If the loan is for a business, a site visit may be required to assess operations, inventory, or assets. This step helps verify that the loan request is genuine and reasonable. Credit officer interviewing client. Visiting shop, taking photos. Loan analysis. Once information is collected, the assessor begins loan analysis. This includes evaluating the borrower's capacity to repay, reviewing financial history or credit score, checking the value and legality of collateral, assessing any potential risks involved. The assessor may also calculate key financial ratios and repayment ability. Graphs, balance sheets, calculator, loan risk grading, right, loan proposal. If the loan is found to be acceptable, the assessor prepares a loan proposal. This includes the loan amount, term, interest rate, collateral, conditions, and repayment schedule. The proposal is submitted to the credit committee for review and final decision. Officer typing report, proposal document, committee members, discussing approval and disbursement. After approval, the borrower signs the contract. The bank disburses the funds, either in full or in stages, depending on the loan type. All terms and conditions are explained clearly to the borrower before disbursement. Signing agreement, handing over funds, client handshake, monitoring, and follow-up. The loan assessor's job doesn't end after disbursement. They continue to monitor repayment through follow-ups, payment tracking, and periodic field visits. If repayment problems occur, they take early action to reduce risk to the bank. Repayment tracking system, follow-up calls, visiting late clients, conclusion. Loan assessment is a critical part of credit risk management. It helps protect the bank while supporting borrowers who need funding. To be a great loan assessor, you need strong analytical skills, ethics, and customer understanding.